stock that cracked in trade yesterday after the company informed exchanges that Enquiries have dropped 20% post the demonetization announcement was Bajaj Finance. In fact, that soured the mood across the entire sector. Rajeev Jain, the MD of Bajaj Finance, joins us on the line to pass through the statements that he made at the analyst call yesterday. Rajeev, hi, good morning, and thank you so much for speaking with CNBC TV 18. Your stock was clearly the stock of the day yesterday on the downside, and I went through some of the comments that you made at the analyst call. You have turned cautious on some segments like the loan against property segment, but any other segments where you see large challenges that could extend beyond 2-3 months?
So we've done a detailed release yesterday, which is reasonably extensive in nature. The first panel is the panel which doesn't belong to us. I want to reiterate and reinforce that. The first panel essentially says that this is data from Bureau, which is CIBIL, agreed by them for us. They've allowed us to publish this. This is Enquiries for retail loans across the banking system in the last 30 days. So if you take NBFCs, NBFC as a pack, not Bajaj Finance as NBFC.
Got it.
The inquiries are down 17%. As per them, public sector banks are down 42%, and HFCs are down 8%. We must all understand that this is post the largest event that we've all seen in our lives of demonetization. So it's only logical that something like this ought to happen. If you look at the graph below that, and that's very important, there has been slow marked recovery.
Yes.
So it dropped dramatically, but it picked pace from there on after 11th, 12th. It's still down 20%, but much better than where it was between 8th and 11th of November.
Rajeev, good morning. I take your point that what the data for the front page was for the industry.
Yeah.
But for Bajaj Finance, what's been the anecdotal evidence? And then as Sonia asked,
yeah, sure. No, I'll give you the response to that. But I just wanted to clarify that.
Sure.
Because it's an important point.
No, that point is taken. Yes.
Yeah. Now, on page 3, we have provided data on what is the year-on-year growth. Just for the month of November, I want to clarify that very clearly. Does not include October. We as a company have had a 40% assets growth in first half of the year. We've had 50% net income growth in first half of the year. And we got into the season, which was October, really well, both from growth, balance sheet growth, and credit standpoint. Now coming to post-demonetization, 30 days, apple-to-apple behavior post-season. If you see the growth, we have clearly published that from two-wheeler and three-wheeler finance business to BFS Direct, which is 14 lines of businesses, they've all seen growth, except in business loans, which degrew. And loan against property, where we took the decision as a company that we would essentially pause on high-value loans in the loan against property space. So it was our decision because that is all that was clear to us given the event that happened.
Yeah, Rajeev, how much does this comprise of your business, loan against property and the small business?
So small business, we think it's transient. Small business is likely to be back in a growth mode in the next 2 months' time. Not for anything else, because of the fact that these are working capital loans. As the economy gets digitized, clients are going to require working capital loans. So that, in our view, is transient. Now, loan against property contributes to around 20-22% of our book. We have had a cautious view on that business over the last 2 years. That business fundamentally has not grown for us because of our cautious credit view on that business. We took the pause because we believe that the luxury end of the market the velocity will stop. I do not have a view on whether prices will collapse or not. I have a view that velocity will stop, which means price discovery will become difficult.
So can you help us with some numbers for Q3 and Q4? What kind of a fall can you see on a ballpark basis in your AUM growth in Q3 and Q4 compared to the 38% growth that we saw in Q2?
Now, I must state to you that it's very difficult to guide on that at this point in time, and that's the reason we have published this data, and I'm qualifying this is for 1 month. You must bear with all managements, I could argue. Given the events that have happened, we will all need to be prepared that the next 1 or 2 quarters for entire corporate India is going to be difficult.
Okay. Rajeev, in the same presentation, you're also giving some numbers on the digital mode payments and all that having picked up. I know the base is very small, but what's the anecdotal evidence telling you?
Yeah, so the base is saying that clearly customers have responded well. They, especially in our urban business, which is 90 to 93% of the balance sheet, if you refer to slide 5 on what we have presented, clearly customers have responded. One, we deal with mass affluent customers in this space, which is 92% of our portfolio. They have responded. They are educated. We have been building capabilities in this space over the last 5 years. We managed to accelerate and use those capabilities to ensure we help customer transition faster.
Okay. Well, Rajeev,
side where there is greater, at least last 30 days, say there is a reason for some degree of caution.
Okay. What about repayments, Rajeev? Did you notice?
We have published the data, Lata. On
Yeah, I
page
saw
5.
that electronic and PDC mode.
Below that, Lata.
Okay.
The last point, which is bucket X resolution, have remained same as pre-demonetization.
All right.
No impact.
Okay. Well, Rajeev, now I want you to wear the hat of an industry veteran. I'm not asking for Bajaj Finance. Your due diligence levels may be superior. Your ability to be nimble and move out of businesses may be better. But for, the industry as a whole, you have your pulse on both urban consumption and rural consumption. What is your sense? Is this a longish pain? Should we expect 2 quarters, longer?
Very difficult, Lata. We are taking month at a time. That's why we chose to also do this, publish this extensive data yesterday, because we wanted to make sure that investors are aware what is the direction. However, I would just articulate that for next 4 months, it would be prudent to take month at a time, both on demand and on repayments. That's all I would personally articulate and argue.
And you also specifically said you don't want to make a comment on real estate prices. I take that point. But nevertheless, if you can, give us a view on the sector itself, can it have, concentric ramifications because people are wary of buying property or because the sector itself is not selling enough? Will there be impact on cement and allied industries? Any ground check?
So, Lata, I would only state at this point in time that the first step would... I want to leave 2-3 things. One, globally, it's an imperfect market. It's a passive market. It's a micro market business. So generalization would be very difficult. So, I am in Pune or in Bombay. There could be micro markets within micro markets, and the impact could differ significantly. I just want to leave that conceptual point first. Now, coming to the second point, what is only clear at this point in time to us is that velocity has slowed. I think that's what is very clear. Now, whether that velocity is going to be transient will be dependent on how quickly the economy, we all behave normally. I think that's the only point I would say. The remonetization happens, I think we will get back to normalcy very quickly.
Rajeev, can you throw some color, a little more color on what the situation is in the two-wheeler and three-wheeler business? Because you have mentioned that this segment has gotten hit very hard in terms of collections. But have you seen any recovery post 15th or 20th of November?
So clearly, rural and it's everybody knows it, that rural markets are lagging behind on the remonetization efforts versus the urban market. So I would take the two-wheeler data with a little bit of pinch of salt that they're running 20 days behind on just the urban versus rural remonetization. So the next 15-20 days would be a more appropriate, we can have a clearer view as is there impact similar to urban or is it deeper?
Okay.
is all I would say.
Okay, Rajeev, final question from my end, and this is from stock market's point of view, because, the Bajaj Finance gets high valuations because of the kind of return on equity that the company has delivered. Sitting here, do you see the ROE suffering significantly going forward?
Okay. So look, we have been delivering supernormal growth in assets and in profitability, which is a key drive, which is a and ROE is an outcome of that. We believe that this move is the right move in the medium term for the financial sector in general. We are very well geared as a company to continue to deliver a 25% balance sheet growth and a 20% net income growth on a sustainable basis for a long period of time.
I can't tell you